What is up, everyone? My name is Ryan and you are watching Crypto Grinders. In today's What's Up, Ryan, I think we are going to be covering the overall markets first, but in this particular episode, I would like to cover about how to achieve passive income with crypto. Now, I think passive income is something that a lot of people have always been talking about, but have never really understood how to achieve it in the shortest amount of time. Now, this is going to be that episode, so stay tuned and let's get into it. So the overall crypto markets today seem relatively the same ever since the past 12 hours. We're not really looking at anything spectacular at the moment. Right now, in terms of Bitcoin, it's still at the same region, which is 69.8 billion. Overall, our market cap is still at 135 billion. It seems to have stopped moving upwards aggressively because we are approaching the weekend nonetheless. And in terms of volume, it has dipped since yesterday's report. So we have dropped about 1.4 billion in terms of 24-hour volume to 28.6 billion. BTC dominance roughly around the same, which is 51.7%. So please take note, guys, whenever, if you're new to the channel, try to understand that as the market cap continues to grow, it just goes to show that there is more interest and more money coming into the system. However, it is hard to determine whether or not the money is from USD Tether or from fresh fiat. So I think we always would like fresh fiat coming in. Now, another thing before I go into the roundup of the top performing cryptocurrencies and the worst performing cryptocurrencies, I would like to highlight a nice increase in UTXO, which is the unspent transaction outputs on the Bitcoin blockchain. Now, why is this important? Okay, this is important because as the unspent transaction outputs start to increase, all right, you want to see a healthy increase over time, especially for UTXO, because it just goes to show that there is actual transactions happening on the Bitcoin network. This was something that we have been observing for quite some time. And if you look at the chart, right? So let me just give a little bit of a explanation. So here you have on the left axis, right, where the Bitcoin outputs, where this is all the transactions that have been happening throughout the period of time. Let me just extend so let's just do a 1 year, and you notice that as time goes by, we are starting to see a very aggressive increase in the number of Bitcoin transactions. That means when more and more transactions are taking place on the network, there's two things that can occur. Obviously, sure, there are more people using it. That's one, but at the same time, there is a price increase as well. So there's definitely something happening on the network. It doesn't necessarily always mean that the price will go up, but at least right now, the price going up and the transactions and the UTXO chart is actually heading north. So in the past, right, if we look at the prior 2018, so I have to go to a 2-year chart, where we experience this very aggressive run-up. Okay, so we experience a very aggressive run-up in the Bitcoin price. Okay, so let's look at the UTXO first before we go to the chart, right? So if you look at this, let's just use October. Okay, for simplicity's sake, let's use October of 2017. Okay, so October of 2017. Okay, here you go. And if we compare that to any Bitcoin chart, so let me just do the 1 day for comparison. Okay. So if we do the comparison right now, okay, so if we look at, can you see that in October, let's say we go back to the 1st of October for the sake of the audience, right? So if you look at the 1st of October, all right, can you see the run up that led to the 20K mark? You see? So right now, although in terms of price, we are almost reaching the point where it started to ramp up in terms of obviously volume and price as well. Here, if we go back to the chart, you notice, okay, it's almost pretty similar, which is 2017, and then there's that strong run up. So let me just go back. 2017, strong run up, right? And then after that, there was a huge tapering off. Okay, so as you can see, the taper off here on the 1st of January, January of 2018, and then there was the whole bear market situation, right? And then after that, yet another dip. This dip was the dip where everyone was anticipating. So there was a drop in UTXO as well, a further drop. Yep. So right now you're seeing the UTXO actually start climbing, and that's a very, very good thing. And the price is starting to recover. Now, could price action and transactions, right, don't necessarily relate, unfortunately, but it's good to see that there is some form of correlation. And when there's some form of correlation, it just goes to show that there could be a potential upside. Now, that upside is yet to be determined. So in a very good case scenario, okay, from a technical standpoint, you would want to see at least Bitcoin breaching 5,000. Like I always mention, round numbers are the best best resistance or support. Whenever you see Bitcoin, any kind of coin that you are planning to trade with large volume, and when I mean large volume, they have sustained their volume for a certain period of time. I think it's always good to use anywhere from more than 1 year and above, right? But there are certain cryptocurrencies that kind of emerged only last year, or at least late 2017. So it's so difficult to attain a proper amount of it's very difficult to get a proper amount of data. So right now, in terms of the overall roundup, right, you are looking at Bitcoin, Ethereum, Ripple, EOS, and Litecoin. Litecoin actually is showing quite a bit of increase day on day, right? And it's now at 3.1 billion. EOS, which stands at number 4, is 3.49 billion. And I think Litecoin is going to be catching up with EOS pretty soon in terms of market cap. So stay tuned for that and see whether you can see a flip in terms of ranking over the next few days to few weeks. Ripple is at 13.6, kind of hard to play catch up, especially for EOS. That's a difference of 10.2 billion, so it's a little bit far-fetched for EOS to actually catch up with Ripple. However, Ripple and Ethereum have always been doing the dance, right? And there was a point where Ripple actually overtook Ethereum in terms of market cap, and then of late, because of the potential release of Constantinople, which is the upgrade which is an upgrade from proof of work to proof of stake, and then now within the internal Ethereum community, they just recently lost one of their top developers, Afri Shodan. Yeah, so I'm not exactly sure. Like I said, when an organization is that large, I mean, there usually is some kind of infighting disagreements, and it has happened way before. Hence, you have Cardano, where Charles Hoskinson actually moved away from Ethereum to create his own, which was initially on the Ethereum Classic, but of course he represents IOHK. From IOHK, then he branched out and also started to create Cardano, right? So Ethereum stands at 15.489, moving off on a little bit of a tangent, sorry about that. And then we have Bitcoin at 69.8 billion. Now, in terms of 24-hour volume, always looking very healthy for the top 5. But I think in today's episode, right, let's cover like the bottom market cap just for fun, okay? So what's at the bottom of the market cap for the top 100 cryptocurrencies? I think let's cover top 100 and not go too far away. I think top 100 is good enough for now. Let's keep it within that region. So you have a little bit of a few familiar names here. So we have Ravencoin standing at 33 million, right? I think Ravencoin seems to be pretty popular back in the day. I think it's still relatively popular with the community as well, because it claims to have certain properties, and it's better than Bitcoin. It also can be mined. So back then, I think there were folks already pretty hyped up about Raven Coin, and right now I think it's also increasing. And this is the past 7-day chart, looking pretty decent, I must say. All right, and then we have Aeon, which is 33.7 million, Metaverse ETP. 33.739 million. We have Storage at 34.7 million, and then I think we have the rest, which is the Bancor, Stasis, URS, which I'm not familiar with. Mona Coin, I've heard that one before. Tomo Chain, yeah, Tomo Chain I've heard before as well. A lot of different cryptocurrencies, guys. Like I said, I'm only covering the top 100 as of today. It seems like there's 2,000 over cryptocurrencies. Back in 2018, I think it was roughly ranging around 1,007. Now what? We've increased another 300 in a bear market period, guys. I'm really curious how many cryptocurrencies projects are gonna start popping up when we fully recover, or we have stopped, or at least there's an official clear and go ahead that the bear market is over. Now, in terms of price, on the charts, let's look at the charts, guys. As I mentioned, we are looking at a few levels. One is the 4,400 level and the 4,550 for Bitcoin. In terms of your OBV, which is your on-base volume, at least it still shows that it's trending upwards, which is a good thing. For Ethereum is relatively looking pretty strong on the 1 day, okay? Obviously, in terms of RSI, we are already at the overbought region, and that just goes to show that you're above the line. I choose to put my matrix at 70 and 30, right? So there's more price action to work with. If we did 80 and 20, then you're going to be very strict. I think it's fine, but I choose 70 and 30 for my RSI settings. Now for OBV, pretty much looking pretty alright. The volume is actually keeping up. Obviously, there was a sharp dip, and then there was a take profit, as you can see here, and hence you see the dip in the RSI and also the dip on the OBV, and the price action actually showed, but it actually sustained above the 140 line, which is pretty impressive. Now you have EOS. Yeah, wow, okay, so EOS, I am staying away from it. Unfortunately, I find that $4 is it's a bit of a struggle, and it's quite a bit of a push, okay, and at the moment I am not anticipating anything exciting. Okay, so whenever a cryptocurrency can validate itself, right, there are a few ways, and hence that's why I was talking about passive income in this space. If there is no element of staking within the coin itself, right, it's very difficult for investors to kind of buy into the idea and only focus on growth. So there are two ways to approach most investing strategies, not trading, investing strategies, where you can just purchase a coin and just allow it to generate a return. But the upside of that is that if the coin or if the project can sustain its value over time, it's worth it, okay? And you're allowing the market to generate a return for you. But not many people can afford a 390 per piece EOS, right? Although yes, you can look at fractions of purchasing something. EOS doesn't necessarily have a staking element from what I understand. I'm just giving an example. And for example, a better example probably would be BNB. Sorry about that. So BNB would be a better example where they actually pay out a portion of their revenue every quarter to loyal BNB investors and holders. Now, the good thing is that not only is BNB enjoying capital appreciation, that means in terms of price, it's actually going up. But if you are someone who doesn't care about market movement, right? You don't care about market movement. I think price going in at a great price is always something that you want to get in on, because the lower the price point that you enter, right, the higher your ROI and your dividend payout over time, because you can break even faster from your initial investment. Okay, so that part, I hope that I made that part clear. Now, passive income, unfortunately, is very questionable in any kind of financial market. Okay, there's only two forms of passive income. One form is that you put your money. That means you have to have money first. Okay, there's no such thing as coming in with $100, $200, $1,000. You know, I don't want to be mean, but 1,000 to 10,000 to even 100,000 really means very little if there's no capital appreciation in the markets. Okay, we're just talking about pure passive income where on a quarterly basis, semi-annual basis, yearly basis, you're able to generate a return. There is very little to substantiate this in this very young market. The top 5 cryptocurrencies, as I just highlighted every single day, are all growth. The only ones that you can so-called have a passive income is through mining. And we know that Ethereum, Bitcoin, Litecoin are all already considered very difficult to mine. If you are not willing to fork out premium dollar to purchase the ASIC miners, right, you're not gonna have any form of passive income. And even if that were to happen, you must make sure that you break even from all the mining efforts. And these days, mining is not profitable. Okay, and whenever miners are shifting their mining power from one coin to another, they are also in a way trading. You see, they are doing an arbitrage trade in terms of resource in exchange for a particular token. And if that token may be easy to mine because it's a very young network, and then okay, sure, you may get a lot of coin very quickly, but if the market doesn't favor that particular coin and maintains any value, they have just wasted a whole amount of mining resources. And we're not talking about a cheap ass mining resource where you can simply do like a hobbyist from home. These days, that thing doesn't exist. We're talking about $1 million operations to multi-million to even $1 billion operations at times. And as a mining facility, obviously you have to pay for electricity. Sure, it's easier said than done and say, oh, you know, around the world there's availability of cheap electricity and whatnot. But those are trade-offs as well, because miners actually can form partnerships with electricity providers or service providers. Either they pay directly for the electricity, or there's a trade-off of profits to the service providers of the electricity. It can be the government itself directly. It could be the actual owner of the power. But back to the fact that I was talking about passive income. So guys, the two forms of passive income that you want to focus on is using the profits eventually when you actually get the profits, right? You want to make sure that you are in a asset class that has shown and proven itself over a good number of years. And I think the best one is still property. Now, property is also questionable, but I think the best way that I can say this is property investment in your own country. Now, that being said, I'm not sure where are you watching this from around the world, but property in Singapore has always been one of the top spots because we have very little land. And when we have very little land, okay, there's always a appreciating price for property over time. Sure, our country has had measures where they actually tame they have actually cooled the property prices, right? Because how they did that was increasing the taxes for foreigners to buy and for citizens who are buying more than one property. All right, the taxes are pretty hefty. Property tax, very, very hefty. And there's also the additional buyer's stamp duty. Okay, but nonetheless, I'm still very much in favor of investing in property because as part of your portfolio, now listen up, when you eventually start making serious money in the crypto space, you are also wanting to generate some form of passive income that is legit. So by owning a property, you are also able to rent it out. And when you rent out that property, maybe you are in a country that, or in a city that has a growing industry, right? Industrial, factories are popping up or offices are popping up. These days, a lot of the millennials cannot afford their own property, so they are always renting. So the advantage is, if you are able to generate a nice return on your existing investment portfolio, or through an ICO that actually just did 100x, 10x, and you put enough money in it first, right? You have to put enough money in it first, right? From there, you have the opportunity to go out there and start property hunting, and that's your very first true passive income, or at least you have to work towards attaining the home. Then after that, finding the right agent to broker it, and then obviously help you rent it out, and make sure that the lease will be anywhere from 1 year, 2 years, or whatever, right? This is kind of like how the game is being played. The next way that you want to focus on is actually investing in the traditional markets, because the traditional stock markets, right? Now, I know that yesterday I had an article that says that millennials prefer crypto, and sure, over time, I'm sure there will be very strong, credible crypto markets that provide a same solid return over time. But these days, the pumps are way too aggressive. I think in terms of sustainability, there are a few cryptocurrencies that are doing that because the prices are just way too volatile, and I think millennials would still prefer capital appreciation over passive income. But as we grow older, when we start settling down, we don't have time to keep looking at the charts, okay? Trading is something that is really for a few people, okay? It's really for a few people, and those few people that decide to go into trading full time, they clearly know how difficult it is to have a sustainable amount of return every time, and majority of the time, most people cannot do that on a regular basis. So investing in the market and allowing the market to prove itself over time is the second type of passive income, okay? And you can invest either in a stock that provides a solid dividend return over time, or you can look at certain corporate bonds from companies that do a solid payout. But even these days, right, bonds have default. So I know that the trolls will start popping out. No, Ryan, you're wrong, because corporations and the credit rating system is all fake. Sure, but at the end of the day, they have at least had a longer time spent in the market. I think time is something that a lot of youngsters don't think about too much, because everything in terms of information is already very fast. When you want to look for an investment these days, everybody wants fast, how to make money fast, but they don't know how to build. And when you're talking about building something out from scratch, it takes time. Okay, and this is one thing that a lot of millennials are learning the hard way, especially in the 2018 bear market, right? Where they learn the hard way that, wow, there's no such thing as year on year, you're gonna see a very quick recovery, so on and so forth. Right now, we're still recovering. We're not even reaching 4,000, right? And it's already almost approaching the end of February, going to March. Is there going to be a possibility of reaching 5,000? Sure, but 5,000 ain't 20,000, right? So this episode, right, was clearly dedicated to allowing you to see that the reality of how long it will take for you. And it's a good episode because you can start planning right now what you need to do, okay, on how you want to build your solid passive income portfolio, so that if you truly want to have that money on the beach mentality, yeah, you gotta suck it up now and start working really hard, because if you don't have enough capital to put into the market, right, you're not gonna be able to attain those asset classes. But I personally don't believe so much into passive income. I believe in active income, because you can control how much income you're going to be making. Passive income, on the other hand, there are a lot of factors that you cannot control. Property sector could take a dump on you, and then you're going to be sunk. You could potentially lose money, especially if you're not familiar with the property markets. The next one, which is the stock markets, can sink as well, guys. A company can also turn belly upwards. So there's no such thing as passive income, if you ask me, it really doesn't exist. Okay, it really doesn't exist. It's all about hard work over time, the grind over time, the side hustles, building multiple businesses. That to me, right, is the real income. All right, so that's all I have today. The episode is a little bit longer than usual, but I really wanted to drive home the message that, you know, guys, if we really want to find life-changing, we want to have life-changing income, we want to have financial freedom, we really have to work for that. And I think it's always good to pay your dues first and then come and talk about how much money we are going to be making and how you're going to make that money. Alright guys, so thank you so much for watching the live stream. If you felt that this episode was awesome, please give it a thumbs up and don't forget to share with a friend or a family member who's interested in building a portfolio or at least investing in this space. This episode will probably be very helpful to them. And don't forget to subscribe and click on the notification bell. We'll see you in the next episode, guys.